Mark Cuban says banks should be scared of cryptocurrency-based DeFi. Born to Russian and Romanian immigrants in July 1958, this man has come a long way. He had asked his father for money when he was 12 years old to purchase some expensive shoes, and he never really could forget the reply his father gave him. His father responded, "Those shoes on your feet look like they're working pretty well. If you want a fresh pair of sneakers, you need a job, and you can go buy them." This American entrepreneur, who is also a television personality as well as a brilliant investor and a media proprietor, has a net worth estimated to be $4.3 billion. The professional basketball team, Dallas Mavericks of the National Basketball Association, NBA, is owned by him. He is the co-owner of 2929 Entertainment, as well as the chairperson of AXS TV. He is famously known as the major shark investor on the television series Shark Tank. He is none other than Mark Cuban, and he has a lot to say about cryptocurrency-based DeFi. Hey guys, welcome back to my channel. Today we are in for something good. Mark Cuban has declared on how banks should be intimidated by the cryptocurrency-based DeFi, and let us find out why. Before we get started, don't forget to hit that subscribe and like button down below. DeFi, or decentralized finance, is a term loosely used to describe different financial applications in cryptocurrency, or it can be used for blockchain provided toward disrupting financial intermediaries. The technology behind Bitcoin, allowing many entities to have proof of a history of transactions, inspires it. The integrated systems and human gatekeepers narrow down the speed and refinement of transactions, while offering the users less control over their money. Here's where DeFi changes the game. It helps in simple value transfer to more complex financial use cases by expanding the usage of blockchain. Bitcoin and other digital currencies are able to stand out from the rest of the payment methods due to the mere fact that the middlemen in the transaction are removed. Types of transactions, like direct purchases, loans, insurance, crowdfunding, or contracts overseen by massive companies, etc., come under this. Ethereum is the second highest cryptocurrency platform in the world, and most of the application of DeFi is based on that. It differs entirely from that of Bitcoin as it's way simpler to use. It helps to build different varieties of decentralized applications which are way beyond that of simple transactions. The platform of Ethereum is suitable for smart contract. This plays a crucial role in executing automated transactions if they meet certain requirements. They designed the programming language of Ethereum, which is called Solidity, to create and deploy smart contracts like these. Some of the DeFi application includes decentralized exchanges, which is a type of online exchanges that helps the users to exchange currencies with other currencies. Next is stablecoins. This is associated with the asset outside of cryptocurrency. Lending platforms use smart contracts and help to replace banks that manage to be in the middle. Another one is wrapped bitcoins, WBTC. It is a method by which Bitcoin is sent to the Ethereum platform so that it can be utilized immediately in Ethereum's DeFi system. This helps the user to obtain an interest in the Bitcoin they lend out. The last one is the prediction markets. This is based on the outcome of future events. The goal is to offer the same amount of functionality, but without emissaries. There have been some concepts that have been created around DeFi. Traders that are willing to take risks in life, this one's for you. Uniswap, 1inch, and Binance, which are some of the well-known platforms out there. These are types of banks where your money is taken, and then you are allowed to invest that money into the financial instruments provided by the platform. In the case of loans, you create a collateralized position when you invest your cryptocurrency. You collateralize your digital asset to acquire against it. This can be termed as collateralized debt position. It is always over-collateralized, and it agrees to a rate known as the LTV ratio. But the rate of digital assets is extremely volatile as collateral. Thus, it is liquidated when the significance of these digital assets falls beneath that of the initial amount or 150% of the collateral. One of the important differences between the banks and the DeFi to be noted is that DeFi doesn't require you to submit any documents, and loans don't need to be approved. You can borrow however much money you want as long as you provide them with collateral. This is the beauty of decentralization's benefits, as they are more open with very minimal barriers. Interest rate and return are other points of difference. The function of the amount of crypto available in each market is termed the interest rate. It all depends on the number of depositors available. When the number of depositors decreases, the value of the interest rate on the payment decreases with it. Different schemes are provided by DeFi against collateral for paying back the loans the user has taken, and they tend to be extremely fair. If they borrow against their digital assets and the user is unable to repay it back, then they have to liquidate, or their funds would be locked until the payment is complete. Interest rates that are offered by the banks do not tend to be as high or beneficial to their users, which is where savings accounts come into play. They should create an investment portfolio in order to buy stocks and also to get into the stock market if they wished to get a higher return. Even though both banks and DeFi yield high profits on the amount of money deposited, DeFi is always one step ahead of the banks because of the platforms present in DeFi. They execute compound interest on the money deposited, thus allowing them to earn more due to the fact the value of the digital assets always keeps on increasing. Mark Cuban is very on point about the future of DeFi. He had written in his blog post, "There are a lot of financial institutions that should be concerned. Banks should be scared. As applicants of DeFi aim to go against all the traditional aspects of the financial world and create its path with the help of cryptocurrency, all DOA does is govern and oversee the different projects and applications there are. Even though DOA is very much like all other traditional cooperation, its control is mainly democratized. It is said to be democratized as it consists of members who vote together and rule out their decision. Later, these decisions are then converted into digital contracts with the help of blockchain. DeFi uses many lending applications like Market, Compound, and OV, which are directly under the governance of DAOs. The whole decentralized protocols of DeFi entices Mark Cuban and makes him believe how big of a threat DeFi can be to its fellow competitors, like the traditional banks. He himself is an avid OV user, and he has invested in it as well. OV, like its competitor Compound, looks like a bank, but it is not? Nowhere close, said Cuban. OV is a completely automated, permissionless platform where there are no bankers, no buildings, no toasters, no vaults, no cash, no holding your money, no forms to fill out, no credit ratings involved. He also went on to say, everything is controlled by smart contracts. It's fully automated. You don't have to get approval from anyone, and it takes minutes to take out a loan. This is uphill's DeFi risk factor. Even though DeFi has a collateralized loan with different crypto entities, if the person who borrowed is using DeFi protocol, then they cannot be held responsible if they aren't able to pay back otherwise. The most extraordinary thing is that according to CipherTrace, between the months of January and April, around $156 million was stolen from DeFi. Cuban was also a drawer to its many other features as well. He points out the fact that it's not essential to raise a large amount of capital to sale. He said, rather than the owners of the business, investors and their creditors putting up capital for all the transactions to take place, liquidity providers, LPs, do it for them. Financial automated markets such as DeFi are way more superior to the traditional companies as they have more capital and they operate more efficiently. Cuban is not blindsided by the risks DeFi has to offer. He is well aware of the technical errors that DeFi face, but he still sticks to his word as he declares DeFi to be the future of individual banking. Hopefully, you enjoyed this video. If you did, please don't forget to smash that like and subscribe button down below. Do share your thoughts in the comment section as well. Good luck!